Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow down 53, NASDAQ off 19, S&P's off 6, S&P's off actually 11. Gold contract smoking, down 90 bucks, trading out at $1,697 an ounce. Silver off $250 at $34.56 an ounce. Platinum down 40 bucks at $1,678 an ounce. Copper off 5 pennies at $3.85 a pound. Light sweet crude flat at $106.95. Bonds down 23 ticks at $143.03. King dollar is the culprit out here, folks. King dollar up 60 ticks. Went into the day of strength and the week of strength, actually, of November 9th and November 1st. Rejected that this morning and then took off topside. Up 60 ticks, trading out at 78.90. Euro down 138 ticks at 133, and the yen is up 82, trading out at 81.28. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get to 1378. You close at 1365. We did 1.1 billion out there. So what you still have, you still had no juice at the highs. You should be banging 1.4. Now, see, what gets interesting about this, folks, is this. We went to a higher high, and if you were going to stay at a higher high, what you would have had there is that we would have hit 1.4, 1.5 billion, even if it gave it up on price. In this particular case, all you had went to a higher high, couldn't handle it. You know, the uptrend is certainly not broken, but what you do have is that you have, well, we'll go one by one here. Let me go over to the Dow Industrials next. When you take a look at the Dow, this is what you have with the Dow. Dow also got to a higher high, closed down 53 bucks, which is nothing. NASDAQ Composite. We go over to the composite. What do we have with the composite? Inside the composite, what you have, composite also went to a higher high, closed down 19 to 2.1 billion. So those 3 indices are showing bottom line that you got to a higher high, had light of volume, gave it up on price. Now, let's go over to the Russell 2000. Russell 2000. This is what we did with the Russell 2000. Russell 2000 is talking, walking, squawking. And what's it squawking, folks? You get confirmation we're going downtown big. This is what it is. Russell 2000 didn't make a new high and came down with volume. You know, we did 62 million shares. That 62 million is after making highs out there with 46 million, testing this highs with, let's see, with 33 million. Bottom line, what you're going to see is this, is that you're going to basically more than likely see an acceleration of volume as we start getting into lower price. Now, let's go over to the gold market, because what you had out here this morning, when Steve and I was on this morning, folks, and don't forget, you know, Tiger TV and of course, at TFNN, we start broadcasting at 9 o'clock Eastern Time, Monday through Friday. Steve kicks us off 9 to 10. Steve and I are on 10 to 11. And what you had at about 10:15 this morning, what you had flat out was a trade. There was a trade that come across, and, you know, you talk about leaving footprints, and it was a beauty, folks. What it was is this. Simultaneously, someone, and this had to be an operator because it was a big trade. Simultaneously, what they did is that they hit the dollar, wide price spread all the way up. They hit gold, wide price spread all the way down. They hit the euro, wide price spread all the way down. That was continuing all day long. Bottom line, what happened with the dollar had got into 78.12. That 78.12 was going back to the sign of strength that the dollar had. What ended up happening is that the dollar had taken off from the lows on October 27th. Then what you had a huge day of strength on November 1st and November 9th. what the dollar had done is come back into that sign of strength on November 9th. The bottom of that was 77.78. We got down to 78.12, rejected it, took off. You know, I suspect you're going to get some follow-through in the dollar tomorrow. Gold contract. Okay, so if we go over and we take a look at gold, what happened with gold is this. Gold, you know, and depending on how long you've been, you know, listening to me, listening to TFNN, bottom line is that this is the way markets go. You know, gold took back basically 6 weeks of trading in 6.5 hours. You get up there, folks, and you don't have the strength, see ya, don't want to be ya, and they never let you out. That's what it comes down to. Okay, now, what do we do? The good news is this, okay? Gold is in a consolidation, folks, and the consolidation goes like this. When we came down in September of 2011, we came down, and it was heavy. Okay, we come down from a price point of, you know, 1925 straight down to 1553. Now, we came down there on the vicious moves were approximately, it was 445,000 contracts. Now, we certainly came down with a huge amount of contracts today. We come down 318,000 contracts. Now, watch how this works, though. When you come, so we hit the, first off, the first move down on the 26th of September, we hit the bottom. That bottom was 1553, okay? Gold consolidating. It starts moving back topside again. The first move up got you up to the 1800 level. We come back down again. Now, when we came back down, folks, on the 29th of December, you came back down with lighter volume. Why? Because it's tired. You know, you got smoked the first time. You did a counter trend bounce. You come back down, you're tired. The way that we came down today, what you can expect is this. And there's going to be plenty of folks that think that, oh, this is going to go break lows and all that. I'll tell you what my take is, and this is why. First off, when you do come off a high, and this is not a high, when you come off at the top of a consolidation and you have volume, which we have, that is saying, yeah, you want to go to the bottom of the consolidation. That's the first part. The bullish part goes like this, folks, is that we did 318,000. That 318, okay, is going into 445,000. Now, gold has still a long way to go to the bottom of that consolidation, because the bottom of the consolidation gets you down to 1565. And what I expect you'll probably get there as you get down, what do I talk about quite a bit? Fast price destruction, light volume. And what that does, that keeps the consolidation in place. You will see how this shakes out as we get down there. So if that assessment is correct, what you'll see is that more than likely you'll see a couple days of going sideways, and then you'll see another acceleration down. It'll be fast price destruction and a contraction in volume. And if you don't get the contraction in volume, don't even think about the bottom of this consolidation. If we go over and we take a look at the GLD, let's take a look at the GLD. If you take a look at the GLD, which is a Street Tax Trust, the GLD came off this top with 43 million shares. Now, when you look at this, it's like, ooh, baby, that's a big number. And it is a big number. It's going into 42 million shares, but when you bring it all the way back, it's going into 52 million shares in the drop in September. Okay? So, correlation again goes like this, is that as we get into the GLD is at 164, as you're getting into that 152, if this is going to stay in a consolidation, what you'll see, we'll go sideways for a few days, then you get wide price spread, you'll get contraction of volume. It'll just dry right up. And the reason for that, folks, is that they've gotten everyone out very quickly, and when you do have fast price destruction, it gets people very scared. Okay, so that's the bullish case. I'll give you the bearish case. That's the bullish case, so that sets up like that. The bearish case, because I see someone in the Tiger's Den saying, you know, is it maybe an ABC structure on the way down? Okay. The bearish case would go like this. You start going sideways 2, 3, 4, maybe even 10 trading days. Starts getting lower. Then, if, in fact, you break that B point and the volume accelerates, that's a different animal. That would be an ABC down. The reason I don't think it's an ABC down is this. If we go over to a few of these gold equities, like let's, we've been watching an Eagle. An Eagle's setting up for a buy. An Eagle's an equity that absolutely just got killed. Bottom line, though, it was only down 95 cents today. That's setting up for a buy. Let's go over to the silver market. What we had out here today, silver got smoked, right? Okay, well, let's go over and take a look at it, because the way that silver was actually setting up, it's not a bad setup, because what you had is that you had an acceleration on the way up. We had the volume going with us on the way up. And, okay, let me just see this. CRB. Let me get this straight. Okay. Silver. Okay, so silver was down 6.8% today. March contract, 4,000. Okay, SIK2. SIK2. Okay, so let's look at silver. Okay. Silver today had 109,000 contracts. Okay, I get new charts up here. I got to figure out. One second. Let's see. Sorry about this, folks. Volume. Where is my volume bar on this? Bloomberg came by today and gave me some new charts. Let's see. There it is. Contract volume. Okay, now we're cooking. Okay, so what you have is this. Silver had 100,000 contracts today. Silver also had come down when it came down in September with dramatically higher volume. Now what you have, what's interesting about silver, so check this out, folks. Even though silver is down so dramatically, silver actually didn't break the uptrend that it's in. Okay, different animal. So what I expect you're going to see happen also is this, is that as this baby comes back down, you more than likely were at 34.65. Yes, it absolutely can get into 30.75. And when it's in there, what you'll see is a replay of the gold, if I'm right, that the consolidation will stay in place. What you'll have there is that you'll have a situation that you have a wide price spread, meaning that's price destruction with no volume. Rejection of the lows, you stay in the consolidation. We stay in this consolidation, folks, and it's an absolute field day because the consolidation is so big. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back.